To our next topic, that is past adjustment. Okay, so after preparing the final accounts or after preparing the partner's capital account, it is found that some items have been taken wrongly or treated wrongly or omitted or okay, in these cases, how we will treat or how we will adjust the accounts. Okay, preparing again it is very difficult, yes or no? So what we will do means we will pass an adjustment entry for covering these mistakes. Understand? So this adjustment entry is required in mainly two cases. Okay, what are the two cases? Means first one, misunderstanding of partnership agreement. Okay, so misunderstanding of partnership agreement means if some items wrongly treated. Okay, wrongly treated means interest on capital is given in partnership agreement 6%, but we have taken or we have provided 8% or 10%. That means wrongly treatment of items. Okay, so wrongly treated or next one omitted. Okay, some items interest on capital is given and we forgot or we didn't treat that particular item, or salary is not given and what happened, we provided salary. Okay, so omission of items. Okay, if any items we omitted. Okay, so that is misunderstanding, the mistakenly we treated the items. Okay, so that is misunderstanding of partnership agreement. And next one is amendment in partnership agreement. Okay, so amendment means they are making changes with a retrospective effect. Okay, what is the meaning of retrospective effect? Means from the back date. Okay, for example, A, B, C, three partners, they started business from last 5 years. Okay, so they are sharing their profit in 3:2:1 ratio, and after passing 5 years they are agreed to share the profit in 1:1:1 ratio with the retrospective effect. That means from the beginning onwards, that means after starting the organization, last 5 years, how they shared profit in 3:2:1 ratio only. So no, so they are going to implement 1:1:1 ratio with the retrospective effect. That means from the previous years onwards, that from last 5 years onwards, whatever the profit they distributed, that will be taken back and it will be distributing in 1:1:1 ratio. Okay, so that is amendment means changes in partnership agreement. Okay, so in these two cases we will treat, or otherwise we will correct the books of accounts by passing a single entry only. Okay, so in 11th standard we studied for each wrong entry we will pass one each separate rectification entries. Okay, but here for all mistakes what we can do, we can pass only one rectification entry or one adjustment entry is required. Okay, how we will deal means just assume we made mistakes in interest on capital, interest on drawing, salary. Okay, so three mistakes we made. Okay, so for these three mistakes we don't want to pass three adjustment entry. By adding these three, what we can do, we can pass one adjustment entry. Okay, let's do one question. In exam point of view, past adjustments are very important, so pay your full attention here. Okay, so the quiz, as per the question, Rahul and Robin are partners in a firm sharing profit and losses equally. Okay, their profit sharing ratio given equally, that means 1:1 only. Their capitals were 25,000 and rupees 15,000. Interest on capital at the rate 6% per annum was provided. Okay, so interest on capital 6% per annum was provided, though there was no provision in their partnership deed. Okay, in partnership deed interest on capital is not at all mentioned, but mistakenly what happened, they provided interest on capital at 6%. Okay, so rectify the above by means of an adjustment entry. Okay, so here that a journal entry is important. So the under working note now you can do any type of calculation, but your journal entry must be correct. Okay. So here I am going to do by passing a table showing which shows the required adjustments. Okay, so as per the question, what they did, what mistake they did, interest on capital they provided a 6%, even though there is no provision for interest on capital. So the mistake was interest on capital wrongly provided. Okay, so what we will do for clearing or for covering that mistake, what we have to do, we have to take it back, or we have to take the amount of interest on capital back from the partner. Yes or no? From partner's capital account. Okay. So what we will do means here interest on capital, when once the company provides interest on capital, it is an income for the partners, whereas it is an expense for the organization. Okay. So in partners capital account, interest on capital we showed under which is credit side. That means it will increase the capital. So once we take it back, then it will decrease the capital. No, so we are taking it back. So we will minus from partners capital account. Okay, so minus interest on capital. Interest on capital wrongly provided. Okay, so what we wrongly provided, that will be taken back. Okay, wrongly provided. So what was the interest on capital for Rahul? Rahul's capital given it is 25,000, 6%. Okay, so 25,000 into 6 divided by 100, and Robin's, what was Robin's capital? 15,000. Okay, so Robin's 15,000 into 6 by 100. Okay, this is Rahul and this is Robin. Okay, so both means from Rahul capital also we will take back interest on capital because it is wrongly provided. No, wrongly given. Okay, and next one to from Robin's capital account also we will take back that interest on capital. Okay, check 0. 1,500 from Rahul and Robin, how much would be? 900. Okay, so from Rahul's capital account we will take 1,500, whereas from Robin we will take 900. Okay, so if we take from Rahul 1,500 and from Robin 900, so in our account how much will be the total? 1,500 plus 900 is equal to 2,400 will be there in our account. Okay, why I use the minus here means because we will minus from, or we will deduct from their capital account. Okay, and the total in our account there will be 2,400 rupees. Okay, so this 2,400 rupees must be distributed in among Rahul and Robin in what ratio? 1:1 ratio. Understand? So add distribution of profit, that means 2,400 in 1:1 ratio. That means plus 1,200 here plus 1,200 here. Then if we credit or if we give 1,200, then from our account total 2,400 will be deducted. So what will be the net effect here? 0. Nothing will be there, and here plus 300 and here minus 300. Okay, so when we pass the journal entry, keep in mind always minus account to plus account. Okay, that means who is minus here? Rahul. Okay, so Rahul's capital account Rahul's capital account to Robin's capital account. What is the amount? 300 and 300. Okay, so that means being interest on capital provided wrongly, now correct. Yes or no? Being interest on capital provided wrongly. Now corrected. Okay, so this is our answer. Okay, you can do your own calculations to find the answer. Calculations are not important here. Only what you have to do, you have to pass the adjustment entry. Okay, different teachers may use a different method for their calculation. Okay, so as per my method of solving the question, okay, a simple method I used here. So whatever wrong or mistakes we did, so that will be corrected. Okay, so here interest on capital we provided wrongly, so we corrected by taking it back. Okay, so interest on capital in the form of interest on capital, Rahul's capital account already credited, that means added with the 1500, so it is taken back, so minus 1500, and Robin's account was credited with 900, so it is taken back, that means minus 900, so in our account total 2400 is there. Okay, so this 2400 we will distribute in 1:1 ratio, because there is no other treatment given in the question, so whatever the amount we have, that must be distributed to the partners in their profit sharing ratio, because already books of accounts are prepared. So this 2500 will be distributed among A and B. So Rahul and Robin in what ratio? 1:1 ratio. That means Rahul will get 1200, Robin will get 1200. So total from our account 2400. Then our account is nil here. Then the deficiency, that means Rahul will compensate 300 to Robin. That is the meaning. Okay, so let's do one more question. Ram and Shyam were partners in a firm. After crediting the profit of the year rupees 2 lakh in their capital account, the balances of their capitals were Ram 4 lakh and Shyam 3 lakh. Okay, so the points I am going to mention here. So the first one, profit given. What was the profit? 2 lakh rupees. Okay, profit given 2 lakh, and after adjustments, Ram's, that means closing capital is given. Okay, so closing capital Ram, it was the closing capital of Ram 4 lakh rupees. Okay, Ram's capital is 4 lakh rupees. Okay, and what was the capital of Shyam? 3 lakh rupees. Okay, Shyam 3 lakh. It is closing capital. That means after crediting the profit and after doing all adjustments. Okay, and the next one, what was given? During the year, Ram withdraw rupees 80,000. Okay, so drawings also given. What are the drawings? Ram 80,000. And whereas Shyam's drawing was 1 lakh. 1 lakh. Okay, and what is the next one? It was found that interest on capital and drawing 10% per annum was provided in the partnership agreement had not been allowed and charged to the partner's capital account. Actually, interest on capital and drawing 10% not provided. Okay, interest on capital not provided, whereas interest on drawing not charged. Both things they omitted. Okay, what are the things that they omitted? Interest on drawing and interest on capital at what percentage? 10%. Okay, these two items they omitted. Okay, so let's do the question. What are the things is given? First one, profit is given. Okay, profit for the year is given 2 lakh rupees. Then closing capitals of partners also given. Next one, drawings given. Ram 80,000, Shyam 1 lakh rupees. Then two things is they forgot. What are the two things is not forgotten? They omitted. Okay, what are the two things is? First one, interest of drawing they omit, or they didn't charge interest on drawing, whereas they didn't provide interest on capital 10%. Okay, so let's find the opening capital, because to provide interest on capital we require the opening capital. Based on opening capital only what we will provide? We will provide a interest on capital, not based on closing capital. Yes or no? So with the help of these three items we can find the opening capital. Yes or no? How to find out opening capital? 11th standard we studied. Now what are the adjustments? Let's recall the points. First one, opening capital. Opening capital. What are the opening capital? What we will do? We will add our interest, or here interest on capital they forgot. No, they didn't charge interest on capital. So add profit. We will add profit. Then less drawings. Less drawings. Then what we will get? We will get our closing capital. Okay. So closing capital will be. So as per this question, closing capital is given, drawing is also given, then profit is also given. Okay, what we want to find? The opening capital we want to find. Okay, so what we will do? Just revise that. That means take the closing stock. Here drawings deducted now. So what we can do? We can add the drawings and less the profit. Then what we will get? We will get the opening capital. Okay, so what we have to do? As per the question, what was the closing capital is given? What was the closing capital? Closing capital is equal to Ram 4 lakh, Shyam 3 lakh. Okay, so 4 lakh, then 3 lakh. Okay, two columns I want to make here. This is Shyam, then this is Ram. Okay, Ram 4 lakh and Shyam 3 lakh. Then add drawings. Okay, why we are doing the reverse form means to find out the opening capital only. Okay, so as per our format of opening, add a profit, less drawing, then we will get our closing capital. So as per this case, closing capital, drawing, profit is given. We have to find the opening capital. Just do the reverse form. Okay, so closing capital 4 lakh, 3 lakh, add drawings. Okay, what was the drawings for Ram's drawing? Is 80,000. Okay, so 80,000 will be added, and Shyam's drawing 1 lakh rupees. Done. And the next one, add a profit. So here what we will do? We will deduct it. Less profit. What is our profit? Profit given 2 lakh, and it is given that the profit sharing ratio is equal. Nothing is specified. So what we can do? We can equally distribute the profit. Okay, so here less profit. Less 1 lakh rupees, and here also 1 lakh rupees. Okay, so find the opening capital. So opening capital 4,80,000 minus 1 lakh is equal to 3,80,000 for Ram. Okay, Ram's opening capital is 3,80,000, whereas Shyam's opening capital is 3 lakh. You understand how to calculate opening capital? So here Ram, we will charge interest on capital. So tell me the interest on capital. Interest on capital. Ram's interest on capital will be 3,80,000 into 10%. That means 38,000. Whereas Shyam's interest on capital is 30,000 only. Okay, that means 3 lakh into 10 divided by 100. Okay, so tell me about interest on drawing. Interest on drawing, I will find out the interest on drawing. So Shyam's drawing is given 80,000. Okay, 80,000 is given, and 80,000 is given now, and the date is not mentioned. So what we will assume, he has withdrawn the amount throughout the year. Okay, so for 6 months we will charge interest on drawing. So 80,000 into 10 divided by 100 is equal to 8,000. So 8,000 half means 4,000 will be interest on drawing. Okay, and here total 10,000. So 10,000 half 5,000 will be Shyam's interest on drawing. You understand why 4,000 and 5,000? Because the date of drawing is not mentioned. So what we will do? We will charge an average period of 6 months only. Okay. So 4,000, 5,000. So let's go and do the statement showing required adjustments. Okay. So the same particulars Ram Shyam total 3 columns and maintained here. Okay, so what are the mistakes we made? First one, profit we distributed. Okay, 2 lakh we distributed in what ratio? 1:1 ratio without considering these two things. Okay, so first we will take back that 2 lakh rupees. Okay, so minus profit already distributed. Profit already distributed. What was the profit distribution? That means 2 lakh rupees in a 1:1 ratio. That means what will be that? From Ram we will take 1 lakh rupees and from Shyam we will take 1 lakh rupees. Okay, so total in our account there will be 2 lakh rupees. Correct? And the next one, after taking the profit back, first one, interest on capital, we have to provide interest on capital. So interest on capital will be added to their capital account. So add interest on capital. What was the interest on capital? Ram's interest on capital 38,000 and Shyam's interest on capital 30,000. So what is the total interest on capital? 68,000. So it will deduct our total profit 68,000. And the next one, interest on drawing. Okay, so interest on drawing will be debited in partners capital account. That means we will charge against their capital account only. So we will deduct it. Okay, deduct interest on capital, interest on drawing. Okay, so what about interest on drawing? Ram's interest on drawing 4,000. So we will deduct 4,000 here, and from Shyam we will deduct 5,000. So in our account total 9,000 will be increasing. Okay, so find the net effect. We will be getting here 66,000 minus 35,000 plus 1,41,000. Okay, so this 1,41,000 is the remaining profit with us. So this profit must be distributed among Ram and Shyam in what ratio? In 1:1 ratio. Okay, so plus distribution of profit. Distribution of profit. Okay, that means 1,41,000 in what ratio? 1:1 ratio. So what will be the effect? 70,500. Okay, so plus 70,500 here, and here also 70,500, and it will be deducting total 1,41,000. Okay, so after net effect, your balance, the profit in your hand must be 0. Okay, so here plus 1,41,000 minus 1,41,000 nil. Now balance here. What is the difference? Minus 4,500, and here what is the difference? Plus 4,500. So this is our net effect. So tell me the journal entry for this. How will pass the entry? As I told you, always whenever you pass the entry, what would be the entry? The format must be minus account letter to plus account. Okay, who is minus here? Shyam account. Okay, so Shyam's capital account letter to Ram's capital account. What will be the narration? Being interest on capital and interest on capital not provided and interest on drawing not charged, now rectified and corrected. Yes or no? So here from Shyam's capital account 4,500 will be given to Ram's capital account. Okay, so what is the narration? Being interest on capital and interest on drawing omitted, now corrected. or now adjusted. Okay. So this is the narration. Let us check first one. Profit. We made the mistakes. Two mistakes. That means interest on capital not provided, interest on drawing not charged. Okay. So we have taken back the profit first. Then in our account 2 lakh rupees. Then first we provided interest on capital. Okay. And the next one we charged interest on drawing. When we provide interest on capital, that will increase the capital of partners. So added, and from our account 68,000 deducted, and interest on drawing we deducted because we charged from them. Okay, so deducted and it is added to our total profit, and the balance in our account is 1,41,000. So that amount have been distributed among the partners in 1:1 ratio, and find the net effect. Okay, net effect means always when you pass the journal entry, no, always minus account letter to plus account. Okay, so minus Sham. Okay, so Sham, from Sham account 4,500 will be adjusted to Ram's account. Okay, so this is